Folks, Michael Zuber, one rental at a time. I just wanted to quickly reach out to Marisol and say, Marisol, your shirt is on the way. Marisol found an Easter egg on my website, one rental at a time. She used that coupon code, and I owe you a t-shirt. Marisol, your t-shirt is coming in the mail. Folks, I do have 5 or 6 more t-shirts. If you are interested in my course, How to Get Started One Rental at a Time, there is an Easter egg on my website, one rental at a time. If you used that Easter egg in the last 2 or 3 weeks and didn't get your shirt, please let me know. It was supposed to be automated. Apparently, it's not as automated as I thought. So I got a few left. Let me know. Marisol, your shirt is on the way. Folks, it is July 5th. This is your daily financial news. There is a lot of stuff going on in the news. First and foremost, for my students looking for the deep dive video or deep dive conversation this Saturday, July 9th, I plan to send out the Zoom link today. Remember, go to Teachable, and there's a little notification bar that most of you, like me, turn off. If you turn that off, I can't send you invites because Teachable won't send it to you. So if you are a student, go to Teachable, turn the flag from no to on. I will only email you Zoom invites for Saturday deep dives. I don't do marketing with that stuff. I don't do anything from it, but I do communicate our deep dive student conversations via Teachable. So if you want to get the invite, turn it from no to yes. And again, I don't blast that email. I don't send anything there except our Zoom invites. And then if you're in the Facebook group, I'll post it there as well. So had a great conversation with Greg Dickerson, folks. Greg Dickerson gave us an hour of his time on July 4th. We did 4 videos together. One of them was about the Fed pivot, and we talked about why Wall Street money managers continue to say Fed pivot this year. Kathy Wood, weeks ago, July pivot. Well, that didn't work. Now there are analysts such as Christina Hopper from Invesco saying the Fed is going to pivot in September, right? Most people are now aligned that, hey, they're going to raise in July 50 or 75. So obviously the next meeting is September. So Wall Street wants to do this. Why? Well, once again, Mr. Greg Dickerson put it so eloquently. They do not want you to pull your money out. They do not want you to go to cash. They get paid because they have float. They have to manage or invest. That's why Kathy Wood and others like her keep saying Fed pivot, deflation, 5-year story is a 10-year story, blah, blah, blah. They need your money to get paid and float their lifestyle. Greg and I talked about it. I think that video went live at 7 o'clock last night. Take a look. Greg Dickerson's playlist. I think it's just called Greg. Amazing, amazing read. Next, hyperinflation. Lots of you still think the United States has hyperinflation. That is incorrect. Again, hyperinflation is 50% and above. You want to see hyperinflation, just Google Turkey inflation. Turkey inflation, the national reported number is 78.6%. Food up over 100%. It is argued that the correct number for inflation, because just like our opinion about our numbers are garbage, people think the reported numbers in Turkey are garbage. They actually think the actual number of inflation in Turkey is 150%. That, folks, is hyperinflation. We have bad inflation. We have sticky inflation. We have inflation that is broadening out, but let's not get it twisted. It's not 78.6%. Next, June's jobs comes out Friday. This is a big number. This is one of those numbers that good news is bad news and bad news is good news. This number will likely be the variable that either cements recession or doesn't with the Q1 and Q2. Because as I've shared here recently, I suspect these 10 economists that live off in Never Never Land, if the June jobs number is positive, I believe these 10 people out here will not declare Q1 and Q2 a recession, just like 1947, Q2 and Q3, which were both negative. Folks, that was the last time that we had 2 negative quarters and a recession wasn't called. A lot of it has to do with jobs. We shall see. So right now the estimate is 250,000. I usually do over unders. I was unclear on how I felt about this, so I took a couple of days. I believe I'm going to take a guess at 238. So I'm going to go under, but only slightly. It's going to be a slight miss. It's going to be a ho-hum number, right? Again, good news is bad news. This number comes in at like 303. You're going to see the stock market get hammered. Why? Because that means the Fed has to continually raise rates. This number comes in at like 105. I think the stock market goes up because then people believe that the Fed won't hit us with 75. They'll hit us with something lighter like a 50. This number comes in at 238, like I'm guessing, just wild ass guess. I think it's just continue as is, and we will raise by 75 basis points. Let me lower this. I just realized it wasn't all on screen. Next, rent. Folks, rent is falling. Rent collections, things of that nature is falling, but let's divide it in half. As an owner of, let's just call it lots of units, I have been warning you. Rent collection is there are more people asking for help today than April of 2020. We have more people needing help today than the depths of the pandemic. I believe this is going to happen nationally. It is one of the reasons I believe apartments and multifamily is in big trouble. And I've said it many times. I don't care if it's Class A, Class B, or Class C. I believe apartments are in for a shock. Rent collections, occupancies, evictions, all of these things are going to start to hurt multifamily. Single family. I believe single family will be better. I believe single family is where people want to be and they will fight tooth and nail to be there. I believe single family homes will even see slight rent increases. It's a supply demand issue. It is unaffordable to buy and they want a home. People are going to say, hey, this July 20th report that Michael talks about is so scary. I will rent for a year and see what happens. But they are going to rent a home, not an apartment. I believe by this time next year, we're going to see rents in apartments down. We are going to see occupancy from a record 98.5% down, and we are going to see rent collection issues. All of this is leading to what I've been calling for 6 months, real pain in the multifamily. As I talked with Rod Khleif, Anna Kelly, Jonathan Twombly, all multifamily investors, their debt structure is stupid. The debt structure in multifamily today with bridge debt, interest only, short terms is going to blow up. Limited partners, you have lost money and you don't know it. Some of you, not all of you, some of you. And I believe that that's why you see me using this marketing, right? This card here. I'm only sending this out to duplexes through quads because I want to be in residential and I want 30-year fixed rate debt. Next, let's talk about Germany and China. Again, folks, this is a worldwide economic slowdown. Worldwide. We are intertwined, whether we like it or not. Germany. Let me get the right quote. Germany posted their first, think about this, their first trade deficit since May of 1991. Folks, Germany is the largest economy in Europe. Germany is an export machine. their trade deficit went negative. Folks, there is no chance that is good news. Bad, bad, bad. Germany's largest economy, the largest economy in the Euro region, just had a negative trade deficit for the first time since 1991. Two things are causing that. One, the export engine is not functioning and demand is falling. Two, imports of gas, obviously from Russia, and food is crushing them, right? Inflation. This is a problem. China, where's my China data? China is established a $75 billion fund to invest in infrastructure. The Chinese government now realizes that their economy, I believe, likely in a recession right now, needs a jolt. Job unemployment up, confidence down, consumers retreating. It is not good in China. Next, Canada housing. Canada. As I have talked about a couple of times, I am very nervous for Canada and also New Zealand real estate for the exact same reason. Their housing markets are based on adjustable rate mortgages predominantly, typically of the 5-year variety. And if you think our unaffordability is horrible, you don't know jack. Canada and New Zealand's affordability makes our stuff look cheap. Cheap. And unfortunately, a lot of things are going the wrong way for Canada housing. They are going to see interest rate resets significantly above where they are today. As I shared a couple of weeks ago, Canada housing, I think it was 23% of folks said they may be forced to sell because they can't afford the payment. They have to refi. This is the catastrophe of our 08 crisis on steroids. It is a structural problem. It is so bad that TD Economics, this is a Canada-based firm, just called Canada housing to crash. They are estimating that the housing crash peak to trough will be 19%. 19. Now, again, you have to remember this is peak to trough. So this is not a call of next month, next quarter, or even next year. A housing crash peak to trough like ours was 4 years in the making. A lot of you think our Great Recession or our housing crash happened in a day, a month, a quarter, or a year. It was 4 years in the making. Canada housing peak to trough is estimated by TD Economics to fall 19%. That is going to create a lot of forced sellers. I expect it to be bad. I actually expect it to be so bad that the government of Canada has to come in and do extend and pretend, institute 30-year loans, something. When you get these resets that go off like a clock in July and then August and September and October, the first people to reset will be okay. But by the time you get to the 6th or 7th month, you are in trouble. Not good. Not good. Folks, I did a deep dive whiteboard discussion this morning on housing 2023. Real quick synopsis. When we think about national median home price, May of 2023, we are starting from a base of $447,000. That was the May median price. Zillow is on the high end. They believe it will go up 9.7%. On the low end is Capital Economics, who sees May 2023 down 5%. I estimate in that video that it's going to go up about 4%. I did very quick math in my head and said up 13. That is wrong. It should be more like up 16 or 17,000 now that I think about it. So again, if you want to take a guess about May 2023 median home price, Let's have some fun. Put some numbers below. Remember, we are starting from a base of 447. So where do you think national median home price will be May of 2023? Let's see if I have anything else. Oh, rent inflation. Again, I talked about rent being a problem. 5 cities had the largest rent drop to date. This is for apartments, not houses, apartments. Tallahassee, Florida, down 6.5%. Anchorage, Alaska, down 6.2%. Urban Honolulu, I don't know what that is, down 6.1%. San Diego, California, down 6.1%. And Syracuse, New York, down 6.1%. Wow, Florida, Alaska, Hawaii, California, New York. Wild collection of the top 5. Anything else we want to talk about? No, I think that's good. Yeah, I think that's good. So at the end, folks, I want you to have a wonderful day. It is July 5th. That was your daily financial news. Please like, subscribe, comment. If you're interested in my course, How to Get Started One Rental at a Time, and you have a little bit of time to look for an Easter egg, you can go find it on my website. And if you find it and use it, you'll get a free t-shirt. Take care of yourself. Have a wonderful day. Bye.